Hello, everyone, and welcome to the first, but certainly not going to be the only Trade Ideas and Sticky Trades new partnership. So me and AJ are here. We're going to do a webinar. We're going to talk about what we've got on the go right now. We're going to talk about what we are planning to do in the future. Basically, the purpose behind this webinar is that we want to introduce the Trade Ideas crew to Sticky Trades, and we want to introduce the Sticky Trades crew to Trade Ideas, and again, talk a lot about how we are going to work together. But before we get into anything, as always, we have to keep the lawyers happy. So we just want to say that, everything we're doing here today is not financial advice. We are both chartered market technicians, so we believe in charts and we study charts all the time, but we're not your financial advisor. So if you want actual financial advice, you should go talk to one of those guys. Again, just going to leave this up here while I ramble for another minute or two, just to keep the lawyers happy. Never a group you want to upset. So right off the bat, I'm going to start, and then AJ will start, which is a little introduction to ourselves. Then we're going to go into a little introduction about what Trade Ideas is, and then what Sticky Trades is, and what we're trying to get accomplished here. And then we'll poke around the platform and tell you what we've got going right now that you can check out at Trade Ideas and at Sticky Trades. And then we'll talk about what we are planning on building out in the future. As again, this is the beginning, we hope, of a long-term kind of relationship. So quickly about myself, I started trading way back in 2006. This is actually when I started using Trade Ideas. I was in university at the time, taking finance. I thought I was going to be a financial planner, all that boring stuff, selling people mutual funds and life insurance and all this. And then there was actually a job fair for a prop firm. And I know AJ will know, he's been around long enough, when these prop firms were really popular. They basically just grab kids off the street and huck them in front of computers and say, here, pound away at the buttons. This was before HFTs. We were the original HFTs. And actually the interview question was more about what video games I played and less about my understanding about finance in the market. So I did that for a few years, and that was really fun until the market got more computerized and that kind of industry died off just a little bit. And from there, I spent about 10 years working in the hedge fund space. So this was around 2008 when nobody trusted anybody because of Bernie Madoff, and there was a lot of need for a third party kind of company that would go into a hedge fund and say, okay, what are you guys actually doing? Are you actually trading? Show me the trades. Let me audit the trades. Where is your risk profile? Where are you trying to make money? What are you guys up to? And again, using Trade Ideas the entire time. I used it when I was at the prop firm for scalping. I used it when I was at the hedge fund. I had it kind of minimized so my boss wouldn't see, placing some trades here or there. After that company got bought out, I started working here with Trade Ideas, and again, always trading my own money. So I got my CMT, I know, way later than AJ. I can't remember. I got mine February 2021. So I'll be interested to hear the older war stories of AJ and how he got it. Because from what I hear, you guys had to do way more work, didn't you? You had to read way more books, I think, than we did.
Oh, well, yes. And it was a longer process. It wasn't so automated as it is right now. You actually had to physically get up, travel to a testing center, and sit there for a few hours to take the exams, part 1, 2, and 3. The interesting thing for me with regard to the CMT, and for those that don't know, CMT stands for Chartered Market Technician. We put those 3 initials at the end of our name to show some credibility with regard to charts and that we know a little bit, at least, in charting. And
Yep.
part 3, for me, they allowed a choice to go take an exam or to write a paper. And if the paper was accepted, it would eventually be published, and then that would count as the part 3 being completed.
Cool.
It took me 3 years to write my paper, though. So it took me a total of 6 years to get those 3 little letters next to my name because of all the research that I had to do. But it was published, and now we have an indicator that has come from that paper, and that's the pin pressure indicator. And we are working with Trade Ideas to get that eventually onto the platform. So I told Michael, before early in the week when we were warming up, folks, you may not know this, but good luck trying to find a single CMT to talk to you about the markets on any of these financial programs, let alone having two in the same room, virtual room that is, having two in the same room talking about charts. And this is the great thing about, and I hope some of you will give us some questions on, what do you think of this stock or that stock or ticker symbols? I love doing that because Michael and I, we have not collaborated on any of those charts. And while we might have different styles in the way we analyze the price action, we will most likely come pretty close in the conclusion and where we think the stock's going to go. And so I don't think this is going to be the last time Michael and I are getting on here. In fact, we're already brainstorming an idea to do more of this and have not necessarily a battle of the CMTs, but think about this. It's okay for Michael to disagree with my analysis and vice versa. It's okay. But if that does happen in a stock that you're suggesting, well, maybe you may not want to go with that one in that direction. But if we have two analysts looking at the same stock and we're both in agreement that, wow, this looks pretty good, high probability upside or downside, then obviously you might want to put your money where the money is going in that sense. And that's where we're going. This is totally a blank canvas right now. We're on the fly creating each and every day. Michael, and you could chime in here. In my experience, I go back to 1982, so I'm a little bit older. You can see the gray hair in my beard proves that. But
I'm catching up.
In 1982, we didn't have computers. We were doing point and figure charting, X's and O's on graph paper. And so while the technology has advanced, the techniques have not changed that much with regard to finding support or resistance or drawing trend lines. And I think we all agree that the market's been under some pressure these past couple of weeks. And today, on a day like today, it still looks like it's under some pressure there.
Well, yeah, and I think that's a really good point about the evolving, how some parts of technical analysis is always evolving and some parts remain exactly the same. So, I mentioned that I've been using Trade Ideas since 2006. That's when I've been trading. And the stuff that I did then wouldn't work now because, again, it was before HFT systems and a lot of what we're doing is very, very fast. But it shows you that, for 40, I see here 40 years of experience as a market analyst, basically just shows you that what we're trying to do as CMTs and what we're trying to do as market guys is all about behavioral finance and investor sentiment, right? Human emotions. And regardless of how the technology kind of updates over time, what we're focused on is that human emotion side of things. We know that trends persist, and that's just the way it is because people have to catch up on things, and they're generally kind of far behind. And we know that buying pullbacks generally make sense, and there's just certain ideas in the market that work regardless whether you're doing it 40 years ago, regardless of whether you're doing it today. The benefit that we have now of technology is it essentially just speeds us up so we can go over more faster. So for the Trade Ideas people, why don't you talk a little bit about what you do on Wednesdays and the speed at which you're able to go through tickers there, and then we'll kind of correlate that to one of the things that we have in the system working with you guys now.
Now, who else from Trade Ideas is on with us right now? We have anyone else joining us? I don't know. I don't have a panel with the videos up. But Michael, could you?
Sorry, I just mean the audience, because basically we sent out a couple emails and a couple tweets, so there's definitely going to be some Trade Ideas subscribers who again may not know much about what it is that you do on your end. So we're just trying to make sure that everyone's caught up, right?
Fred in the Q&A box. And by the way, folks, if you're live right now, you could put in questions into that Q&A box down there. and I see not so much a question, but a ticker symbol with a question mark from Fred on NFLX. Can you show off the platform there and bring that up and
Yeah,
look at that? Because
let's hop
yeah,
let's hop into
because
the platform and talk a little bit. So right off the bat, so one of the things that we've added, and this exists right now for all Trade Ideas subscribers, and I know Rob will be posting some links if you're not a Trade Ideas subscriber to pick this up. But right when you launch Trade Ideas, you'll actually see that gray beard right here in the channel bar. So if you click on that, you are going to be presented with a channel that we've built together with AJ that has we're working on some indicators to match his charts. We have some indicators on there already, specifically the moving average that he uses, and then access to some of the things that he is watching. You'll also be given this layout right here that just, if you want a quick video, I did a little video describing what we're doing right here, and then a special 15-day trial to StickyTrades. So if you want to give that a shot, we have a link here right in the platform for you, and then a little bit of a description of AJ, but we'll be going over that kind of as we go. So getting into this right off the bat, you'll see the rapid fire stocks that AJ does on Wednesday, a big list of those that are going on right here, and then also a stock race. So essentially what a stock race is doing is it's showing you what's performing the best out of this list. So this list of stocks that AJ is going after each and every Wednesday, these are the stocks that are performing the best right now. You can see the Qs are pushing up. I see Microsoft there, which is good because I bought a little bit of Microsoft yesterday on the close. So I hope this one wins the race. That's my bias as well. And then you have access to charting. So we are building out this charting platform, and we are improving it with AJ. So we are going to have the ability to add some of the indicators that AJ uses. We are working on our drawing tools to make sure that they're kind of doing exactly what AJ wants. But the idea here is that when you're using StickyTrades and you're looking at what AJ is doing and you're watching those videos, you can then quickly just go to Trade Ideas, you can open it up, and you can get kind of the same idea of what it is that he was looking at on our screen. So we're able to keep those in sync. So yeah, Netflix. Let's bring up Netflix. Now we
one
have
of
the ability to.
yeah,
Yeah, go
one
ahead.
Michael did it so quickly, the audience probably missed it. When for most charting platforms, when you're looking for that little tiny box to type in the ticker symbol, and you can't seem to find your bifocals, it becomes pretty hard to get that ticker symbol in the box. But on this particular chart, you can go anywhere on that chart, anywhere on that
Yep.
window, and put in the symbol and then go enter, and you got it. Now, Fred brought this one up, and the reason I wanted to look at that is because there's a huge gap in the market that's still open, and you can see here that Netflix has recently, over the past 3 days, formed a very well-defined and textbook pivot point to the downside. Now, whether or not the stock is going to come all the way back down to fill that gap is to be seen. But I'm a big option trader, and I know from looking at the names in the participants box there, we have a lot of option traders as well. I see Randy there, and I see Julie and Roby and Robert. There's a lot of folks there. And what happens is when you see a gap on a technical chart like that, for me, I see dollar signs because for the most part now, and I don't know if Michael has a set of rules for gap trading, but for the most part, I've seen 80% of the gaps fill or at least make an attempt to fill. So the gaps become a price magnet for that stock. And gaps, you were talking about more or less the sentiment of the market, Michael. Psychology plays a big part in price action. And that big jolt up, that gap up in Netflix was created by a lot of emotion based on good news. And that's usually what you see is an overreaction to the news, whether it be good or bad. And then when the smoke clears and people realize that they've overreacted to the news, prices tend to gravitate back to norm. and those gaps tend to fill. Not always, but a lot of the time. And that's why I see dollar signs. So if I was an option trader, I would be looking to maybe do something that had more of a bearish tendency or slant to it. And I don't want to get too technical with the options, but we would put a negative delta position on something like that and then look to play time decay. Now, if you're not an option trader, this is a great opportunity for all of you, because as we create this partnership between Trade Ideas and StickyTrades.com, we are more or less expanding the horizons of those who never may have looked at a chart, or maybe never looked at a basic option position, or maybe there's a lot more people that have never really considered risk management in their portfolio. And Michael, I'm sure after you could show a lot of the techniques that you use by looking at a chart like this. Let's say you took a position, how would you use the chart to manage risk? If it doesn't work out for you, you got to know when to pull the plug on that trade and bite the bullet and take the loss. How do you treat that, being that you are a trader?
Well, and that I just want to highlight that as well. And if you don't believe in any other concept that we talk about with technical analysis, and I know there is still some doubters out there, there might not be in this room because right they've come here to see us, so they may believe in technical analysis more. But one thing that I can think we can all agree that technical analysis does an amazing job of is risk management, right? And we know that if you manage risk, if you make more money when you're right than you lose when you're wrong, even with a subpar win rate, over time you'll do fine. And that's really what I think the power of risk management is. Now, the thing I love about this gap you were talking about, so anytime you see this vertical yellow line right here on Trade Ideas, this is just us highlighting when earnings happen. So we don't need to guess why the gap up occurred. Now, again, we're technicians, so we really don't care too much about that. But it's good to know, okay, earnings just reported and earnings out of the way. And AJ is right. We're taught, and there's a lot of study being done on gaps. When they fail, they generally fail pretty big. And I like the psychology behind that, because basically imagine you bought Netflix the other day when it was down there at 350. You wake up the next day, it's over 400. You made a great return in your portfolio. Generally speaking, what people are looking to do is they're looking to sell. So how would you sell this? I just think as either an amateur trader or even as an institutional trader. One thing is just to sell right off the open. But like AJ was talking about, a lot of people may just put their stop up below the low of this day, right? So if we just zoom in a little bit, you may
Exactly.
say, okay, well, we gapped up on earnings. We put in this little pin bar. I'm going to put my stop right up there. And
Mhm.
you better believe that there are institutions and market makers and funds that are looking, saying, well, if we can trade it below this low, there's a whole bunch of stops that we have the potential of triggering. And if we hit those stops,
Mhm.
then we can, whether we're trying to load up or whether we're trying to short more and get a cover on that position, that's what I think causes these sell downs. So for me, when I look at something like this, I'm hyper focused on the low of this bar right here. And if that low breaks and I see some momentum behind it, that's where I'm getting involved. Now, where to manage risk? Absolute worst case, if it breaks the high of this base, you got to be out. Like, to me,
Mhm.
that's a little bit wide. I like to be very, very tight with my risk. I focus way more on risk reward than I do on win rate. So for me, if it broke, let's call this uh, 393, the low of this bar, just to round.
Mhm.
So if it breaks 393, if we get back over 400, that psychological level, I'd probably be out, just because I like to keep a really tight risk. But I don't think there's anything wrong with someone who may want to just do things a little looser, saying, hey, I'm going to enter if we break this area, and I'm just going to put my stop up there and move on. Again, for me, that's a little bit loose, because what I'm looking at is this is my risk, and I want to make more than that if I'm correct. Now, if the gap fills all the way to the bottom, then if this is your risk and that's your reward, then you're probably making a 2-to-1 or a 2.5-to-1, which is fine.
Right.
But if I can make my risk this, and then if I'm right, it fills the gap like that, then I'm much happier.
Intel is a good example as well, because yesterday we put out a publication to get long calls in Intel. Now, I normally don't trade earnings news. I normally don't do that. However, if you look at that chart after, I mean, or I should say before today's opening, you obviously see how big the stock gapped up today. But you can
Hmm.
see that there's a pretty key support level that was at these pivot points back in July and even into late August. There's a support level right there. You see that? Right, exactly where you drew. Now that's not just a an average support level. That's a role reversal, as I call it, where if you look all the way to the left back in May, that horizontal line was at one point a resistance level that tested a couple of times, and then it broke out of resistance right there, and then it turned to support. So that this the publication that went out yesterday to get long Intel was not because I was anticipating a blowout of the earnings. It was all on a technical read. And then we also talk about scaling, and this is where charts come into play. If a lot of people, they look at their buying power and they say, "Wow, look how much money I have to go shopping," and then they spend all their money on one or two stocks. I like to preserve as much of that buying power as possible and scale in with smaller percentages of the position. That way, if you're wrong and you're still at a support level, you could still parlay or cost average the price down a little bit. And if it goes up on strength, you could add to it on strength, which a lot of people have a challenge with buying
Yep.
as the stock is going up. They feel like, oh, I missed out. I could have bought it lower. And they're always trying to buy the lows and sell the highs. True traders buy the highs, sell it higher,
Hmm.
or they'll sell short on the lows and look to buy it back lower. And so that's a concept that technicians look at all the time, pivot points especially.
Well,
There's enough. Yeah, go ahead.
that's a huge concept in technical analysis, right? Is that you're right. There's so many people, especially when they're new to the game, they want to figure out how to sell the absolute bottom tick and or buy the bottom tick and sell the top tick.
Hmm.
True technicians know, and it's because it's hammered in our head in the CMT quite a bit, is that market's trend. And I think it was Livermore who said the bottom couple percentage and the top couple percentage are the most expensive, right? What we're looking for is that kind of meet in the middle. So I totally agree. If you're able to get into a trend that's already established, knowing that just statistically trends persist, right? If you zoom way out on the market, you can just see that over time things generally go up. Um, but yeah, so trying to avoid that bottom or top tick, I think is very, very important. Now, just wanted to show a quick feature for people who maybe they didn't know that earnings was coming. We actually warn you, and we have this window right here we call a single stock window that actually gives you a whole bunch of different data points. So if you're more of a fundamental type person, me and AJ not so much, but there are those people out there, we tell you and we'll actually flash in red. So what's actually, I think Apple's coming out with earnings soon, so that might be a good example, right? Right up here on the chart, we kind of warn you that, hey, earnings 4 days, in 4 days, and we give you the date, and then whether it's after the market close or before the market opens. And then we have all of your fundamental data right here. So if you're a short float guy, we'll update, the short float, we'll update the actual float, change from the open, all kinds of data points. And these are just the ones we built for you. And then if you are a news person, which I think the best decision I've ever made in my trading career is avoiding news as much as possible. I don't read it. I don't really know anything about what's going on outside my little cabin in the woods here, but you can do that. So if you want to, so the top news we have right here is Apple Watch sales come in under pressure. If you click on that, it will actually open up the news article, and you can read that if you want to do all that stuff. But that's just to get back into the charts right here. I did
Yeah.
see another, now that we're talking about charts, I did see someone talk about Lilly, and man, on a longer term point, Lilly has just been absolutely on fire. So what do you think of this pullback, AJ, on Lilly? Do you think this is buyable, or do you think it's too
Well,
much here?
actually, it's funny you say that. I'm gonna show my little technology pad here. See, this is handwritten. This is from my
Old
week.
school.
This is from the midweek, the rapid fire session, and right
Yep.
there at the top is Eli Lilly. See that? And Fred put that one out, and we had a downside target on that one. And lo and behold, we hit that downside target yesterday. And if you look at the chart there, now I think it was Liliana who asked the question, what is that blue line you have on the chart? Now I'm assuming that's the 20 period moving average from the.
That's right. Yeah.
And I'm not going to put much of it. And I'm going to put Michael on the spot. I'm going to ask him a question because I know he knows the answer. What kind of candle do you see right there on the candle for Lily today? How would you
This one,
describe that little bit of a candle there?
uh-oh. Is that a hanging man? Is that what that
You
one was
think that
called?
what's your bear? That's
This, I'm no. This is
inverted hammer. But
a
look at the remember,
yeah.
yeah. Now, remember from back in the CMT days, Charles Dow he had the tenets of Dow theory, talked about
Yeah.
trends, right? You mentioned that already. He also talked about volume and how that more or less confirms what we're seeing. And this is a big deal for me because when I look at Lilly, again, ticker symbol LLY here, I see that it's a small body candle, but here we are right around 1:30 Eastern time. We're more than halfway through the trading day, and that volume isn't even close to halfway of what it was yesterday. So we have a drop in volume on the way down, which tells me that the sellers are losing momentum. And that's just see, people don't look at volume as a leading indicator, but I do. In fact, I think it's one of the forgotten leading indicators that a lot of people are ignoring. Once in a while, you turn on the financial networks like they're up north, BNN, or maybe Fox
Yeah.
Business or CNBC. They don't really talk about volume that much unless it's in the context of talking about the breadth of the market. But when you're looking at an individual stock, here's a little tip for you folks. If you're trying to buy a stock or you think about buying a stock and you see the volume increasing quite dramatically on the way down, I would suggest, and this is my suggestion, not advice now, you all read that legal document there. I would suggest that you give it a couple of days or at least wait for that volume to drop because you really don't want to step in front of that freight train and buy it and have it punch you in the face as added volume continues on the way down. But I think it's getting close to a buy. I don't see a pivot point yet. But I would be, as an option trader, I would probably look to maybe do like a broken wing butterfly or some type of a bullish or positive delta position because I think it's not really out of the question to think that this one could eventually get back up to that 20 period moving average. As John Bollinger would look at it as mean reversion, right? It's on its way down, but it looks like the momentum is starting to slow a bit. Yeah.
Yeah, so I wanted to hit your volume comment right away because we actually have a really cool data point. Because you're right, it's really hard normally to evaluate volume until the day is done, right? Because we know that a lot of volume comes in on the open, a lot of volume comes in on the close, and then in the middle of the day you get not so much. So we have a data point, and this is included with every kind of chart you go over in this. Which is just called relative volume. And the idea is what we do is for the math nerds, we take the day and we split it up into segments. And we say this stock is doing X amount of volume at this point in time compared to how much volume it normally does. So you don't really have to guess that halfway through the day, we're not quite halfway done volume, because what will happen is we'll say, okay, so you're right, it's 1:30 Eastern. So normally at 1:30 Eastern, Eli Lilly does way more volume than this. We're showing a 0.77 relative volume.
I didn't know you had this. I didn't know you had this. This is a great tool because if you listen to what I just said, I'm looking at the time clock. Here it is 1:30, and I'm comparing the volume as it looked yesterday, to what it looked yesterday, and I'm thinking, well, we only have 2.5 hours to go, and not even half the volume from yesterday. So this is in that line, but I love this. You got
Yeah, and
me.
you don't need to. So essentially, anything under 1 is less than normal volume. If we were sitting right around 1, it'd be kind of on par with a normal day. Yeah, and you're right. If I'm looking at stocks that are breaking out, I want to see a 1.5 or a 2 in this box, just saying, hey, this is doing 150% to 200% normal volume. And yeah, you're right. Again, your eyeball, but it just saves you a little bit of time, is what we're talking about before with you hand doing charts versus kind of what you can do now, yeah, we're doing less than normal volume. So you're right. The other thing is we just talked about gaps, and that was the thing that I really wanted to highlight with this candle today, is we were just talking about gaps. And yeah, Eli Lilly gapped down a bit. And I love candlestick patterns. And the reason I love candlestick patterns is because they do a really good job at pointing and saying, okay, what exactly happened today? People that look at line charts, they know where the stock closed, but they don't know everything that happened today. So right here, you can see what happened was we opened up pretty much right where we are now, and then it tried to close that gap, and it closed that gap ever so briefly right here, and then the sellers came in and
Yeah.
rejected it.
There's
Yeah.
big plays for the intraday traders, and a lot of our StickyTrade.com members know this. Is there are trading opportunities, especially in the morning when you're looking at how markets are about to open up in the pre-market session. And Michael, maybe you could even show Eli Lilly on the minute by minute chart to see what it looked like in the pre-market. But the gap that Michael is referring to is not a daily gap, it's an intraday gap where the stock opened up lower than where it closed the previous day. And when you have those types of gaps, those are very high probability trades for the gap fill intraday now. Now this is not long-term trading, folks, or investing. This is for the people that have ice water running through their veins and can stay disciplined with managing risk. Because Michael, you know that if you say, okay, I think that gap is going to fill, I'm going to buy it on the opening with the intent of closing the position after the gap fills. But what happens if you have an uh-oh moment and it doesn't look like it's going to fill the gap and continues to go down?
Yeah.
You have to put your risk parameters in place. You have to make sure that you're saying to yourself, before you even get into the trade, before you even hit the enter button, where would I get out and how much am I willing to lose on that trade if it goes against me? You have to stick to it. You can't change your
Yeah,
mind.
the faster the trade moves, the better you have hopefully planned it out beforehand, because you don't when you're dealing with a sub intraday or intraday trading, you don't have time to hoe and to hum and to think about, right? You better have that trade completely planned out before you hit the enter key, because you're right, if this just turned and didn't fill that gap at all and just fell apart, you could be chasing on the way down if you didn't already have that plan.
Yeah,
So
and you have to pick your trading style. I mean, one of the great things about the Trade Idea platform is that you could customize the screen to fit your style of trading, right? So let's say that you are you're a gap trader. Well, you're going to get involved in the markets in the morning, and you're probably going to be out of your trades maybe even mid morning or early afternoon, and you're done. Back in the day when I was on the trade floor, I came from Comex, so I was a pit trader. But after 10 years of standing up trying to make a living, I decided I wanted to sit down. So I became a NASDAQ market maker. I took my Series 7 exam, moved from my Series 3 futures trading to Series 7 being a market maker. And every single market maker will tell you, or any professional trader for that matter, will tell you that the risk management is the most important part. They don't call it, stop loss. They call, what's my drawdown? And there's going to be a head trader in that trading room that is going to be watching your position. If you're trading for a bank or a major trading firm, you're not really the one making the decisions on how long to hold onto a loss. Someone behind you is going to tap you on the shoulder and say, flatten up. For me, that person was Marty Cunningham. He was the head trader at Mayer and Schweitzer. And it's a drawdown, they call it. So it's a very small percentage of the loss that you're taking. But the great thing about learning how to take losses properly and using technical analysis to do it is that it helps you preserve your buying power so that you're around for another day to go do the next trade. Otherwise, you're going to wipe out your buying power, and then you can't trade anymore. At least for a while, you won't be able to. I see a question in there on Tesla. It's from Dominic. Well, actually, it's just a ticker symbol. You want to pull that one up, Michael? See what Dominic, do you have a question, or you just want us to pull up Tesla so we could talk how great EV market is? Well,
And while I do
and
that, I just saw a question from Fred here, basically just saying, hey, and this is something that we're trying to alleviate with this very conversation we're having right here. And the comment was just, I tried trade ideas, and it's so complicated I could not understand it. And yes, it's the problem we have is it's a very robust platform. AJ's learning today a bunch of stuff that it can do that he didn't know. But the point of this, and this is what I want to talk about, what we're going to push into the future doing as well, is that everything you're seeing me do here on the screen today is completely pre-built for you, right? You just find AJ's face on this channel bar on the side, you click at it, and you're now looking at this layout exactly like AJ's built it. And we are building some indicators that he's asked for and some drawing tools that he's asked for. So the idea is this is going to be kind of set up for you. You don't need to go through all the complicated setup. It's just done there for you. And what we're planning on doing in the future, and this is just kind of want to announce here, that we're pushing towards and we got our devs working on, is that when AJ highlights a position, so let's go into Tesla and just use an example real quick.
I was going there, but you beat me to it, and I love this part.
Yeah.
And
So
by the
say
way,
for
Fred, I just want to
yeah,
say something real quick. I stepped on you there, Michael. Sorry.
no,
On
it's fine.
on Tuesdays, Dan Elliott and Nod do a class on this platform to show our members, and then spend time with them answering questions and looking at the chat and going through it. So it's not like you have to learn this all in 1 hour. This is more or less a journey, and how to use a new tool to your advantage, and to customize it so that it fits your strategy or your trading style. That's it. But go ahead, with Tesla again. Yeah.
Yeah, so well, let's actually start. What are you looking at Tesla? What do you think is going
I
to
would
happen
be
here?
more of a buyer here. I would be more of a buyer, because if you look at, you zoom in a little bit more to the last week of price action, it is trying very hard to bounce. You
Hmm.
see the support level there. You just have to be careful, though, because if it breaks out below that support, and again, this is where the risk management comes in, that could be taken as an inverted flag pattern, and you got to be careful because that could continue lower. Hence the reason why the risk management is going to be much more important if you decide to take a long position. Now, what I like about Tesla technically is that it's a spinning top candle. That's usually a sign of indecision. You usually find those at
Hmm.
pivot points. The drop in volume is there, and granted, we have a little bit more than 2 hours, but I don't think that volume is going to beat yesterday's volume. And there's the all important gap that we were talking about. So this is actually almost the inverse opposite of what we saw in Netflix, where Netflix gapped up
Yes.
and it's starting to pull back to the gap. This one gapped down, and I think it's got a shot of pulling back to the gap. Whether or not it'll fill it, we'll have to see. But I mean, that's a great trading opportunity. Again, especially for the option traders, you can trade conservatively. You can get a little bit more aggressive. But one thing that I like to touch on, and Michael, he alluded to it, was with regard to the stops and how to use the charts, is that as the stock is going up, one of the techniques that I find a lot of people are missing out on is how to use a trailing stop. And what that means is that if you take a long position, you set your stop below a key support level, as the stock goes up, you want to move or ratchet your stop up with the price of the stock to protect your profits. And then once your stop is at a level that's higher than your buy price, now you're just protecting profits and you can relax a little bit more. But when it gets to that point where your stop is now at a level higher than your purchase price, now you let the market tell you when to get out. If you get stopped out, you exit the position, go to cash, celebrate your profit, look for the next trade candidate. But
Hmm.
I would be more inclined to the upside on this. But you see, with the way the markets are right now, again, there's a lot going on in Israel and Gaza. We don't know. There's a lot of nervousness in the market. I mean, look, the Dow is,
Yes.
what is it? Dow is down like 300 points again.
Hmm.
But I think the market's going to need a little bit of a break from this downside pressure. We might see a little bit of that next week, and then we'll have to keep an eye on that volume again. But Tesla, I like it more on the long side than the short.
Yeah,
How do
so
you?
one functionality we have in Trade Ideas right now that a user could do when they listen to AJ, maybe they agree. They say, hey, there's two kind of equal tops right here on Tesla. So I want to be alerted when the price hits this level. So I'm just going to right click on the chart and I'm just going to create a price alert. And it comes up with this box. You can write little notes. You can have it only valid for a number of days, or if it hits a certain price, it removes that alert for you. One thing we are doing, and this is going to be kind of phase 2 of the relationship, we'll have another webinar going over this when the technology is done, is that when AJ's sitting down and doing his work and highlighting these, they will actually show up for people who subscribe to Trade Ideas and subscribe to the Sticky Trades channel at the same time. So when you open up Trade Ideas in the morning, you'll not only have the layout exactly the way AJ had it once we get the indicators and the drawing tools and all of that sorted, you'll also have a list of these are all of the stocks and these are the levels that I'm interested in these stocks. So, you could simply, I'm just going to write a gap fade play, but
That
these
that's
notes will
that's a
obviously
big
be,
deal. That's a really big deal because it's like you're more or less we're putting together what I would even say is like a virtual trading room. We're not all
yep,
collaborating, talking at the same time, but all of a sudden a note pops up. It draws your attention to a stock like Tesla or another stock that looks like it's breaking out or pivoting. Now you click on it and go, and then you
yep.
you start to trade if you want to trade it if you feel comfortable with it. And you could do options, you could do directional, go with the equity only and trail the stop, whatever you like. But it puts us all in the same room, and it helps us stay more dynamic in the market for
Yeah,
sure.
and if you are a sticky trade, so the idea is we're trying to trade ideas and sticky trades. We're going to be working together on this. So, say AJ says I like Tesla if it breaks over these wicks highs, then there'll be a link and it will say that will take you to the sticky trades trade idea and
Mhm.
how potentially to express that via options. So if you're a stock person, you can just maybe buy the stock when it hits that level, take the trade that way. But if you're an options person, something that Trade Ideas hasn't had a lot of is this very specific options trade. And that's where this relationship I think is really cool, because then you can go, okay, AJ likes this at this level, and maybe I agree, but maybe, Tesla's a $200 stock, and maybe I want to express this better with options. Maybe something is too risky for me to express with stock, and I want to express it with options so that I can, cap my downside risks with the option premium I'm playing. Just click on a link, it will take you there, and you can read more about that trade. And then as the day goes on and as trading goes on, if something is found on the fly, it will be added to Trade Ideas, and then it'll be added to Sticky Trades, and you can see those as it goes. So that's kind of the future of what's going on here, just teasing you guys into the future.
Here,
But I
here's
do see,
here's an example. I type in HACK, ticker HACK. This is a stock that came up in our rapid fire analysis on Wednesday. Now you got to
mhm,
understand, Wednesday we were just coming out of that green pivot point, but
yep,
we had a pivot lower, so it was doing an about face. And if you look at the volume, so here's the key: straight down from that big red candle on Wednesday, we had a big increase in volume on the way down. You see
mhm,
that? With almost
yep,
no shadow underneath that candle. So
yep,
I put a downside target on that, and this was a star favorite, by the way. This is one that would show up on the list and even in the racetrack. But this was a star
mhm,
favorite to the downside with a price target of $50.40. So if you go back to what Michael was saying, and here it is Wednesday, we put in that price target for all the people that are part of that rapid fire session who have trade idea chart. You don't have to take such copious notes on Wednesday. It'll be on your chart with, and Michael, correct me if I'm wrong, but if I draw my target line on that and save it to that chart, it will save for all the other members looking at that note. Is that correct?
that we're working on that, but yeah, in the meantime, it will actually be in the note as well. So,
Like,
like I mentioned, you can put in a
like,
note. So in that note, it could be, hey, I like hack short. Here's the target,
there
so
you
that
go.
people just
And
they
everyone
can see
gets,
exactly the idea.
yeah, everyone gets it right there on their own
Yeah.
platform. So, yeah, we got a lot of good stuff going on. And boy, I can't even imagine what would have happened back in the early 80s if I had a platform like this. Holy mackerel. Like I said, we were doing it all by hand, and we were all sharing one Bloomberg terminal in the middle of the trading pit. It was actually, for those of you that saw the movie Trading Places, that I was actually in that movie, and I was a consultant to the director, John Landis, and that's one of the most accurate comedies I've ever seen on Wall Street, because it's exactly how the markets move. If you didn't have a chance to watch that movie, now's the season. It usually starts coming out at around, the Thanksgiving season here in the U.S. I know you celebrate Thanksgiving different day up there, but right
Hmm.
around Thanksgiving, Christmas, it plays over and over again. Get a chance to watch that, and the other thing you'll find out is that they traded the market. The heroes in the movie made their money by shorting the futures market. The general public had no idea how they were making money, but they were shorting it so that when orange juice futures dropped like a rock, they made all the money, and the two brothers went to the poorhouse. And so this is where we are. We are living through this technology, and I'm telling you, Michael, I've never been more excited about a market responding to technical signals than I am now, because I believe the fundamentals are okay. I talk about them once in a rare while, especially when interest rates are going up. You want to maybe filter out some of the companies that have high or very high debt to equity ratios, because as they carry on that debt with higher interest rates, it's going to eat into that bottom line. But
Hmm.
but I've never seen the markets trade more technically than they are now, because there is so much emotion and confusion and noise, as they say it, right? There's a lot of noise, a lot of data, a lot of distractions. The more you focus on these charts, the more accurate I believe you're going to be. But the big deal is that the charts and platforms like this are going to help you calm down that emotional content that gets involved in that trade. And when you mix emotions and money, it usually doesn't work out that well. So you got
No.
the platform, you got two CMTs talking to you right now. You've got a support team to help you through the platform. You've got webinars, you got notifications, you got publications. It doesn't get better than that. We're in the time to make money right now.
Yeah.
Absolutely.
And as mentioned at the beginning, this is only the start, right? We're planning on doing some sort of segment where me and AJ shoot the shit on the market periodically. We have a whole roadmap of technological improvements to help share ideas and help kind of uh, highlight charts and show what's going on in the market. A lot more curated content, right? So just go back to that one user's question of, he didn't really know what to do when it came to setting up trade ideas. That's the point we're trying to get to, is that we're removing that entirely. Not only are you going to have a setup layout like this, but yeah, you're going to have two CMTs talking about the markets, how to use the layout, how to place trades. Haven't even gotten to that point, but you can place trades directly through the platform. It will hook up to your broker if you'd like. A lot of cool things. So we've only got a few minutes left here, AJ. You want to open up, maybe do a handful of charts and then call her a day, or
Yeah, there's one in
what?
there. Who is SYM was the ticker symbol. That is brought to us by Steven, first name only on there, Steven. His comment is SYM has hit our downside target today. Any thoughts now going forward? Thank you. Well, this was
Um,
this was also another one, SYM. You could expand that chart and you could see that it
yeah,
wasn't.
just quickly, I never heard of this one, so I was just reading. Again, another thing you can do is reading
Yeah,
what they did.
that's what happens on Wednesdays is that the audience throws out the ticker symbols. These are not my suggestions at all.
Yeah,
But what had happened is we put a downside target of 35.60 on this one,
yeah,
and it just hit today. Now, moving forward, what do you do? Well, if you took a short position back when this forecast was first made, I know I sound like I'm almost even scolding people for not doing this, but you must protect your profit right now, because that's a pretty big profit from
Yeah.
where it was and to where it's now. And look at Michael did it. I didn't even tell him to have to do that. Look where you dropped that line. You see that?
Yeah.
That's just a natural thing that technicians do. They're looking to the left as they draw to the right, or they're looking for support. There it is. It's
Yeah.
right on a support level that was tested and then broken in September, and then acted as resistance coming into October, and then broke out of resistance, and now it's flipping back and forth, role reversal, right? And so
Yep.
now it's right at that point. So if I'm looking at the volume, I'm not going to expect a breakout to the downside below that support, because we got the weekend. Anything could happen over this weekend, and the stock
Yeah.
could bounce right up. Now, I can only tell you what I would do is I would take at least half the position off the table, completely off, and then I would put a buy stop right above today's high. That's what I would do, because if you get a price move on Monday that winds up to be higher than today's high, then you got either a half signal or a full-fledged pivot point that's going to start to draw the stock up. So you realize the profits on half, protect the other half, sit back with your stop, and relax. Now, the only thing that really gets in the way of something like that is if all of a sudden the stock announces some great news on Monday and it gaps up 20%. All right, well, that happens sometimes. Chances are it won't happen with this one, but definitely I would be protecting profits on that one after a short position was taken. Yeah, I'll let you
Yeah,
pick.
and that
I'll let you pick the next one. Go ahead.
yeah,
You
well,
get.
just naturally, right? You're right. When it hits this level and it's down, a substantial move to hit that level, right? You've got to be paying yourself on that position, right? Because there's a
Oh,
lot of energy expended to get us there. I'm gonna pick Google just because I've seen it a couple times by a few different people. I'm trying to aggregate this, and it's very interesting because this is one that it gapped and then it sold and then it gapped again and then it sold. So what are your thoughts here on Google?
I would be very quick to say buy it. And again, it goes right back. Now, you see that the trend line was broken. This is one where maybe Michael and I might disagree on this, because if you draw the longer term trend line on Google, with the exception of the last 3 days of price action, it's pretty obvious to see that the trend line was intact right up until 3 days ago, and then it broke out. You see that?
Yeah.
So this is again another bit of evidence that traders and even institutions will trail their stops, or at least place sell stops below a trend line. And what
Mhm.
happened is it gapped down, and then all of those sell stops were triggered off as a massive market sell order, and it gapped it down and pushed it down and kept going. But look at the volume starting to drop. The other thing
Yeah.
is, what moving average do you have there in the blue? That's interesting. What moving average is that you have
So
on there?
this one's the 20 period moving
Yeah.
average, but I actually drew this purple one right here, and this is I'm a fan of Brian Shannon's work with anchored VWAP, and we do some anchored VWAP work here with trade ideas. And the idea is that anchored VWAP is essentially the average market participant. So if you started to buy Google at this significant low area right here, your average price, and you kind of dollar cost average into it, your average price is right here at 120. So this
Right.
to me is a very interesting level. At the same time, you've got this kind of congestion here at 120. So I'm with you on this, that if we hold 120 here and we put in kind of a significant bottoming tail, that this one is very interesting to me.
Yeah.
So it just shows that, right, AJ, before I even drew that line, came across this as a potential buy a little bit differently. But from the way I look at it, yeah, this anchored VWAP is a significant level as well. So that kind of stacks a few things on top that make me want to, when we're done here in a few minutes, I may go look up Google and pull the trigger on a couple shares here.
Michael,
Um,
I don't know if we could take credit for moving the market, but over the last 4 minutes since we started this, Google just popped up a little bit. I don't know. We have that big of an audience here on Trade Idea Webinar. I don't know. Maybe one day we'll move the markets, but yeah, I would definitely be looking more on the buy side. But as an option trader now, I wouldn't be going long the stock. I'd be doing something where I'd be buying an in the money leap option and looking to sell an out of the money in a diagonal calendar call spread, and then I would wait for a pop. This is just the way I would trade it. I would wait for a pop for yesterday's gap to fill, and then I would turn it into a broken wing butterfly and sell some call spreads after the pivot point. Yeah, right in that area. When it gets up to that area, I'd be selling some out of the money call spreads to complete the broken wing butterfly. But again, that's something that we teach at StickyTrades.com. I'm really excited about this platform, especially when all the changes that I've requested and asked Michael to make. Once those are made, what you'll see is, for those of you that follow along with my weekly market report and my midweek market report, those will all be done on the Trade Idea platform, so that you'll have that recorded on YouTube, and you'll see how I navigate through the price action. We're just waiting for those changes to take place. So stand by, and that's coming down the pipeline there for sure.
Absolutely. So with just a couple of minutes left, do you have any closing thoughts for the audience, or do you want to shout out places to follow you, or obviously if you're looking to sign up, we've got
I don't
on the site here.
I don't have my sales cap on here. Maybe not. Maybe our sales manager would be upset for me not plugging something. But I just want to touch on something I think is very, very important, folks. For those who know me, they will tell you where my heart really is. For years, I toured with a guy by the name of Tony Robbins. Some of you may know who he is. I went on the seminar circuit with him. I did the Wealth Mastery events in London and Spain and different parts of Switzerland and such. And I would travel and stay many weeks away from my family as my kids were growing up. It was very, very tough to live on the road. Now, what I'm getting at here is that when I would go back to my hotel room after being on stage showing people how to read charts and trade channels, I would go back and I would reflect on what had happened, and I'd say, what did I do today? I showed people how to make money. Oh, big deal. I showed them how to make money. And people were grateful for that. Don't get me wrong. But my world changed quite dramatically when I started showing people how to make money to do good things with the money. There's a big part of that. Now, whether you buy into that line of thinking or not, I'm going to tell you something. When you have a purpose for the profits that you're making, you will become a better risk manager, because you know that, if I don't put that stop in, I'm going to risk what I could be donating to charity or whatever it may be, or I could be missing out on, helping my grandchild or niece or nephew with their college education. So you put a purpose on why you're doing this instead of just making money for the sake of making money. And I hope your life will change as well, and as dramatically as it did for me. Everyone has a different reason for being in the markets, and I don't believe in coincidence. David is one of the principals of Trade Ideas. All of a sudden, I'm on a conference call and I see David. I go, David, is that you? David and I work together in another company developing content. And I just don't believe in coincidences. I think this came together for a reason. I feel good about it. There's a certain energy that I'm absolutely loving. Michael, you and I, the first time ever presenting together, was this any kind of an effort on either parts of us? No, it just flowed. That's what's happening. It's just flowing. And I appreciate all of you for watching this. And for those of you watching the recording, I hope to connect with you soon. I'm not hard to find. Just go right on YouTube, look me up. Michael's out there too on Twitter. And we will absolutely be back to do more of this. I'm absolutely certain. So I'm going to toss it to you for the final comments, Michael. And again, thank you for having me. Appreciate it.
Oh, no problem. And hey, I don't have much to add to that. I think I totally agree. There's one thing to stare at a chart and hit a couple buttons and make a couple bucks, but when you understand what you can do with that to help your family, to help others, to help your community, why not, right? If we're honored enough that we can hit a couple buttons and make a couple bucks, we should definitely help those who can't, right? So I love that as well. And
Widely
AJ's right. I remember we had our first kind of introductory business call, and I think me and you took up half of it, just like talking about CMT
Yeah.
stuff and charts, and you could see all the marketing guys like pulling their hair out and like, we're trying to move along to sell stuff, but we just had so much fun chatting about what we were thinking on the market. So
I
I'm
don't think
excited.
you got the
Yeah,
commit. If you gave a commitment, are we going to be seeing you at the summit in January? Are you coming to that one?
I,
All
I
right.
ran that I ran that by the boss, which is the wife, and she said yes, but she's gonna try to figure out. She looked online. I guess there's like a heated outdoor pool, and she's like, man, leaving Canada in January to go to Florida sounds absolutely amazing. So
You won't
I'll
even.
be there for sure.
Oh, it's just going to be hot down there, and you're up there in the frozen tundra, 1 hour ahead of everyone. That's how far north you are, and
Yeah,
that's going to be fun. So for those of you that are interested, we're having a summit. There's limited seating. It's a very small group, but we got a great lineup of speakers. Michael and I are going to be two of those CMTs that I'll be presenting for you, and I guarantee you're not going to regret going to that one. So I just threw that one
yeah.
out there just for the heck of it. So again,
No,
thank you.
absolutely. Anything that gets me defrosted in January and gets me out of Canada, I'm all for. So I think that's great. I think that's a great first webinar. I think Scott is back, who runs all this system. So whenever you're ready, let's take it away and tell people whatever they need to be told. And yeah, just excited for the beginning of the relationship.
Thank
Yeah,
you.
thanks everyone. Thank you, AJ. Thanks, Michael. The recording of this session, in case you missed anything, will be up later on tonight or tomorrow. Everyone that registered will get an email reminder from GoToWebinar with a link to our webinar playlist on our YouTube channel. So stay tuned for that. Thanks, everyone. Thanks, AJ, again. Thanks, Mike.
You're welcome. Have a good weekend.
Yep,
Good
you too.
weekend.